We go. Yo, what's up, guys? I hope you're having a great day. In this stream, we're going to be going over a couple stocks that I think are worth buying right now. Three of these stocks I just bought yesterday, and I'll show you how much of the stocks that I bought. But the very first company I want to go over is a company that I actually don't own, but I really do believe, not financial advice, that the risk to reward is amazing on Netflix. I'm just really big on advertising. Hence, one of the next stocks we're going over is Meta, but I'm super big on advertising. Like for the first time ever, OpenAI and ChatGPT, they're buying for the first time ever, they're doing Facebook ads and they announced they're doing a Super Bowl ad. These companies can't grow without advertising. And why wouldn't you advertise if you always, like with these Meta ads, you get such a great positive return. Like if you spend $100, you're getting more of $100 in profit in advertising if you do them right. So anyway, I think Netflix is going to be a big advertising play as well. They slowly transitioned a while back from subscription model only to a lower tier subscription where you see ads on the platform. So anyway, Netflix is at a pretty good valuation. If you look in the middle of my screen right here, actually, let me look at it over here because it looks better. The forward PE is a 28. Historically, they haven't been that cheap since like 2022 when they were going through a lot of boycotts and stuff. Some people are boycotting Netflix right now. But anyway, it's a very fair valuation in my opinion, 28 forward PE. But best off, check out the bottom line, the net income here. They make easily 2 to 3 billion of after-tax net income a quarter. And not just net income, but also FCF, which is free cash flow. They're making 2.5+ billion of free cash flow a quarter. And if we go to the expectations right here, it's just up and to the right. It's going to be 81 cents in 2 quarters. Now, they did have a one-time adjustment this quarter because they have never paid tax. And like it was in this one like provenance in Brazil, or it might have just been Brazil. They've never paid taxes, so they just had to pay like 600 million, and they got out of trouble, and now they're good. But that hurt their EPS this quarter. But it's going to be 81 cents. It's never even, it's never even been close to 81 cents. So that's where the 28 forward PE comes in, because the EPS really is supposed to spike up year over year, and they've been beating on expectations. And another big thing Netflix is going through right now, which is why the stock is selling off. It's probably a catalyst why Netflix is selling off. That's why I think their PE is going lowered. Netflix is trying to buy Warner Bros. Discovery, and it's not going to be accretive to their EPS. But right now Paramount Skydance is bidding like over 100 billion, and the more Netflix has to pay, it's even more decretive to the EPS. But ignoring all that, I am so bullish on advertising, and I think Netflix is a great risk to reward to start nibbling on. If you wanted this as 5% of your portfolio, don't make it 5, but buy 1%, make it 1% of your portfolio or something like that. I really do like Netflix at this price. So next up, I just bought this company in my Robinhood portfolio, and then I'll give you a portfolio update because we hit a new all-time high today, believe it or not. But some people don't like this, but I'm always a fan of doing this. I bought a fractional share of Meta yesterday. So check this out. I bought I didn't have any cash. I spent all my cash buying other stuff too. So I had like $60 of cash. So I'm like, that buy me exactly 0.1 shares of Meta. So I bought 0.1 shares of Meta for $61 at 616. Now it's 620. Meta is even cheaper than Netflix. And I think potentially the EPS might even grow faster at Meta because they had a little one-time adjustment this quarter. But you won't believe this. If you want a stock to buy that's also on kind of look on a great technicals, on a technical analysis, I think Meta looks great as well, but I'm not so great at technicals. We like deep diving into the fundamentals because that's what moves the stock in the long run. I think if you just be patient and buy Meta right now, super not financial advice, but I really think if you buy Meta at this price, you'll get probably 10% of your money back every year for the rest of the time at this valuation. I mean, the forward PE is a 20. And again, you start the dollar cost average. And if you're wrong and it never goes back to this price again, then GG. But, start the nibble at this current price, even if it's a very small position. Like I just said, I bought 0.1 shares. But if we look at the forward PE, which is basically that's basically priced to next year's net income. Forward PE is a 21 on Meta. Now, why are we not looking at the current forward or the current PE? Because it says a 27. Well, they actually had a one-time adjustment this quarter. Check this out. It says the EPS was $1.05. Again, the EPS and net income are the exact same thing. And Well, the EPS adds in any buybacks or dilution. But look at this. The net income says 2.7 billion. This was a total one-time adjustment. If you go to the operating profit, which excludes that one-time tax adjustment, literally it was a $15.9 billion tax accounting adjustment. Not at all. So you look at the operating profit, you always blend these kind of numbers. This is the before tax number. You see how it's always 20 billion, but the net income right here is 18 billion. That's where they pay the couple billion of taxes. But anyway, this is the before tax number, before interest. The core business was it was a record Q3, incredible Q3. We look at the total revenue was $51 billion. And on that, you won't believe this. Meta makes after tax profits near 40% net margin. They're an advertising behemoth. Now, one thing being questioned on Meta right now is how much they're spending on the universe. Check this out. If you go to their cash from investing activities, they're spending right now $20 to $25 billion in net income a quarter on new assets, specifically like Scale AI, NVIDIA chips would make this go negative. I'm so happy that they're spending so much like Amazon. If this was positive, that means they're like actively selling out of their assets. You never want to see that. So some of this is from the metaverse too. They just announced they're cutting metaverse spend. I think in the news right now, they just announced they're cutting jobs at Metaverse. Yeah, look at this. Meta cuts job in Reality Labs, shifts focus to AI and wearables. I love the Meta Ray-Bans. That's one thing I'm a huge fan of. They're said they're potentially doubling to tripling the capacity. They're getting nuclear assets, Meta and Ray-Ban's experience projections. So anyway, I really like this. And Meta completes $2 billion acquisition of AI startup Manus. They actually, Google Gemini and ChatGPT are the big winners, but they have around a 4 to 5% market share of total like AI. They actually have a big market share. I didn't believe it. So they kind of just buying their way in. But yeah, Mark owns 13.5% of the company. I do like that. So yeah, it's definitely being questioned how much they're spending on AI because they have for the first time ever in history, they have a net debt position. And with their Prometheus bond issuance for their huge mega data center. But anyway, I love Meta. I think it's a steal of a deal, not financial advice. Hey, what's up, Plasma, Deborah? I'll get to y'all stocks in a minute. I want to look at two more here. App name. Yeah, hey, there's actually a brokerage right here if you like buying stock, or if you don't already have a brokerage, it's my favorite one to buy stocks on. It's called Moomoo. If you want to use my affiliate link, it's in the link tree in my bio, very first link there. If you go deposit $100, we'll both get some free stocks. But anyway, this is my favorite brokerage to not just buy stocks, but it's really useful to analyze stocks. Okay, let's see here. Yeah, link tree in my bio, very first link there, Moomoo. So, First Solar, we definitely got to look at First Solar after this. So the next stock I just bought another share of, besides we looked at Meta, and I don't own Netflix, but I do think Netflix is good. I actually just bought another share of Amazon. I couldn't help it. I saw the dip yesterday, and I'm like, I just have to buy another share. I want to build up my quantity of shares in Amazon. And, we bought another share in them like a week ago, and I bought another one. And every time I buy a share, I'm raising my cost basis because my cost base was originally like at 185. But every time I buy a share, but I don't mind because I still think Amazon will still have monster returns. I think easily a $300 plus stock in the long run. If we look in the middle of my screen here, they have a 31 forward PE. That's really fair for the behemoth of Amazon. They're literally an ETF in one, big robotics play, AI play. They're a grocery store. So they're basically, AWS is the number one cloud market share. So they're like a Walmart, an Oracle, a UPS, an Instacart, a Trade Desk, a SpaceX, all in one. AWS, this does over $100 billion of annual revenue, and they have a $200 billion backlog, or basically money owed to them in AWS. It's crazy. That's their highest margin business because they're not making too much money, on the overnight, one-day shipping, really small margin there. But the AWS business is huge. So that's actually another thing I love about Amazon, margin expansion. Check out on the very right here, 2025 Q3, their net margin. They have an 11.76% net margin. It's never been higher than that before. If we scroll out to 2023, 2022, this stock was a tough buy. You're looking at a stock with, single digit margins. Even in 2022, it's like, how are you going to buy this thing? They're actually losing net income every quarter. They have negative net margins. But now the margin expansion on Amazon is what I love here because they're transforming their whole business model. It's incredible. And look at the EPS beats every quarter. Like analysts expected $1.55. They did $1.95. And hence, this is why I think Amazon's a real steal of a deal. If we look at their right now forward PE, it's a 31. That 31 forward PE uses this $1.95, $1.71. And if they're every quarter beating 20, 30% on that, potentially the forward PE could be like a 25, 26 if you do just like a 1.5 year multiple. I mean, that's why I don't mind buying more shares of Amazon at its current price, because here's what I love about Amazon too. If we go to their cash investing activities, or even better than Meta, you can't out innovate Amazon. The day they announced they're expanding the same day delivery shopping with Whole Foods, they own Whole Foods fully. They own Twitch. They're an advertising play. Yeah, their advertising revenue is booming. I forgot to mention that. But the day they announced they're expanding same day grocery delivery in 1,000 cities, Instacart stock fell 15%. And check out their cash and investing activities. They spend 25 to 40 billion of their net income, free cash flow a quarter, investing in the future, investing in assets. And that's what's so great about Amazon. You can't outspend them, and that's why I'm okay with them not paying a dividend and not doing buybacks. They actually dilute you 1% every year, but that 1% makes them a lot of money. But I don't mind that, because the margins are to the moon. The net income's up and to the right. The balance sheet's deleveraging. Their liabilities were 55% of the assets. Now it's only 49. I have no complaints on Amazon, and that's why they're a great never sell stock. And I own them here in my Moomoo portfolio, which is called my buy and never sell portfolio. So yeah, I can't wait to give you a stock portfolio update. We hit a crazy new all-time high today. You wouldn't believe it. But let's see here. Wait, was that all the stocks? Oh, that was all the stocks I had. Oh, well, hey, I only had 3 stocks to go over. Okay, great. Well, let's see what y'all got. What up, Plasma? First Solar looks interesting. This is my favorite solar play of all time. Out of any solar stock that exists ever, if I was going to buy one, this is the best one in my opinion. There's no like Enphase just doesn't have the type of net income and resilience that First Solar does. So check this out. If we go to First Solar, their net income, after tax net income, they're easily making 2 to 4, 500 million in net income a quarter. We can scroll back out all the way to 2023. 2022 is a rough year for all the solar names. But I always thought, solar does great in a low interest rate environment. They even have still done great. 2024, 2025, they're still making 3 to 4, 500 million a quarter. So, but they are like commodity type. That's why they're at this low multiple. This actually multiple is super fair in my opinion. If we go to the price to net income, forward PE is an 11.5. As rates go lower, I think that's going to be a huge tailwind. They could potentially stretch up to like even 15 forward PE. And send this up maybe another 20, 30%. I mean, even from here. So, but you want to probably keep this one as a bit of a smaller position. Yeah, look at these EPS projections. It's going to go from $1.95 to $4.32 in just $5 next quarter. That'll be a record EPS. Yeah, let's see, $5.15. Yeah, I'm scrolling out here. It's never even been close to $5.15. So watch next quarter. That should be interesting. Well, price target on Amazon, in the long run, easily $300. I even think it could hit $300 this year if everything goes right. Thoughts on a correction will happen for silver? Hey, yeah, that could happen. Ooh, what up, Jim? He says, war is coming, so buy P&G. Let's check Kraken Robotics. What's your number one stock for 2026? That's a great question. The super sad truth is, I'm so boring. I really don't have, but it would be Meta or Amazon, the 2 stocks I just went over. And this, the S&P 500 is at an all-time high. A lot of the great names I'd love to recommend, I really can't recommend at today's price because they're so expensive. But Meta and Amazon are great prices, and they've already done pretty decent, not Meta. But let's check out Kraken Robotics. Wow, this stock is mooning. I mean, congrats if you own this one, Jim. You got to be up on your position. They're only worth, even at their all-time high here, they're worth 2.5 billion. So that's still a market cap that's kind of easily doubleable. Okay, so this is a Canadian company. So let's actually convert the currency to USD just to get a bit better of an idea here. So they do have a forward PE. So that's actually surprising. They're profitable. So it's a little choppy. Let's go to the operating profit. Yeah. So out of all the robotic stocks, there's like Rich Tech Robotics is really junk. I'd much rather own this one because this one, I don't know if they have any IP or patents, or I wonder if there's any. Oh no, I did not click that. Kraken Robotics secures 35 million in C-Power battery sales to 3 customers. Oh, 3 customers. Wow. I don't know really what these news. Kraken Robotics partners with Trive Capital. Okay. To form Crack acquisition. Okay, I don't know what all that news is. But anyway, I like this one because they're already profitable. The sales did grow 55%. Again, it's really small, and it probably is it's definitely the risk reward mine today does not look good. But revenue's up 55%. We'll look at the analyst projections, and they're already profitable. They just fortified their balance sheet. Check out how the assets like jumped up by 100 million and the liabilities stayed flat. So I'm guessing they diluted you. Yeah, so they did dilute you by $80 million, but it just fortified their balance sheet where they potentially never have to raise money again unless they're trying to do some huge acquisition. Yeah, they're supposed to stay EPS positive next quarter. Revenue is going to go from 11 million to 30 million. So there's going to be a 200% growth rate in the revenue. So it's 22 mil this quarter. It's supposed to hit 35 million next quarter. That's actually great. Annualize that. That's like 130 million of revenue a year. $2.5 billion stock. It probably is a tough risk to reward, but I like that they're already profitable. Probably one of the better, smaller, probably the best small robotics name out there. I'm a bit behind here. Okay, let's see here. SanDisk, yeah, I saw that one like 5 times. Let's do that one. SanDisk. This is one of the. Did I just unplug my mic? I really hope I didn't. Let me just. Okay, good. I did it. Sometimes I bang it and it just disconnects from the slightest touch. Okay, so here's SanDisk. This is your memory shortage play, and I've been covering this one. I remember the day it went to 350, and a lot of people probably were in here too when I was talking about this. But this stock, well, probably it's tougher to buy today, but it probably even today is not crazy expensive. Check this out right here. They have like a backlog into 2026, but specifically check out, actually, let's just look at a basic metric here. The EBIT, the earnings before interest. 2 quarters ago, it was just $2 million. It's going to go like this quarter, it was 176 million. This was a record. Next quarter, it's supposed to be 640 million and then 780. So the EPS, like if we go to the earnings per share right here, it's always really bad. But next quarter, it's supposed to be $3 and then another $3 is supposed to be like, so if we go to the forward PE here, basically what I'm trying to get at is if we look at the forward PE, forward price and net income, it's only a 23. Yeah, their current PE is a negative 34, but it's pricing in next year's growth, which is going to be an absolute, like you're going to get like 900%, 1000% EPS growth rates year over year. And the revenue was a record 2.3 billion. It's going to hit, 2 points. The margin expansion here. Let's see. I know there's a bunch of news. Probably, yeah. Multiple analysts raised SanDisk price targets on basically memory shortages and AI-driven demand. Gross margins projected to reach 48%. What is it right now? 29%. So they're going to hit insane margins. I mean, it's just crazy. Let's see here. NVIDIA CEO highlights storage as critical AI market. SanDisk poised as key beneficiary. SanDisk plans to double enterprise NAND prices and introduces prepayment contract model. Wow. Unconventional contract modeling, 100% cash prepayment. And the order could take 1 to 3 years. Dude, they're going to print money anyway. There's a lot of news I could cover here. But yeah, this one's your memory play. It's really tough to buy it at all time. It's just like Micron. And Micron's the other one that almost moves identical with this one. Check it out. Micron's also had an insane gain. Again, this is another one where look at the EPS projections. It's going to be insane year over year. It's literally going to go on the left from $1.68 to all the way on the right, $9.40. The EPS is net income. So this quarter, they did literally $4.60 of EPS. That $4.60 is the same as $5.25 billion of after-tax net income. And the EPS 460 is supposed to go to $8 next quarter. So they're going to make $10 billion net income and then like $13 billion net income. That's why Micron as well, this one's even cheaper, an 8.8 forward PE on Micron. It's just nuts. Memory prices surge, benefits Micron. I want to see, we were looking earlier, like their backlog might even be into like 2027. Micron Technologies predicts memory supply shortages to persist until 2028 amid AI-driven demand. I mean, you can't make this up. Micron can currently meet 50% of key customer demands. I mean, the demand for these products are crazy. Micron Technology breaks ground on a $100 billion New York semiconductor fab. That's kind of interesting. Anyway, I'm probably spending too much time on these 2 stocks here. Let's look at some more here. But hopefully that was a little cool analysis on the memory shortage stocks right now. Clean Spark, I think that's like a crypto miner. Ooh, so here's a stock. Thank you, Connor. He says, love the content. Can you look at ACHR? Thank you so much. But sadly, I don't have anything good to say about Archery Aviation. And, that's what I like. I always be fully honest. I always give it to you straight. This is not a good buy, in my opinion. It's out of all the stocks out there worth 5.8 billion. This one's a tough buy. They're a startup. They have no revenue at all. Here's the revenue. It says zero, because they never sold anything, not a product or a service. So they have no revenue. And if you go to the net income, they lose 100 to 200 million of net income a quarter. And they've kind of done this for all of eternity. So how are they sustaining all these net income losses if they have no revenue coming in? Well, here's the super, super sad part. They're diluting the life out of the shareholder, basically using the stock to get cash. Look at that. I can't believe this. You've been diluted 66% year over year. So you own 66% less of the company than you did a year ago. And if you own this from 2 years ago, after they already diluted you by 43%. After this much dilution, even if the net income goes positive, the EPS will be still negative. But they're years, miles away from profitability and from just getting revenue. I know they have some they have an upcoming thing in Dubai, I think I heard, or something. Let's see right here. Archer Aviation partners with NVIDIA to integrate AI technology. It's one I just can't trust just from the financials right here. We go to the revenue, there's no revenue here. So that's the only thing that scares me. Revenue list, and they lose 100 mil, 200 mil a quarter. That's the only thing that scares me there. And the dilution there. So, yeah. Okay. I know you haven't been the biggest fan, but you need to do CoreWeave, actually PGY. Hey, what up, Craig and Nicolo? Hey, what's up? I'll give you a good stock KKR. Let's check out this. Joby is it better than Archer, Rube says. Hey, Archer, maybe we'll check out that one too, Joby Aviation. And then I want to do a stock portfolio update. I can't wait to get into that. Actually, let's look at PG. There's so many new people I got to get to here. Do you recommend NVIDIA this year? Actually, I'm going to go to NVIDIA real quick. I actually do. Here's the crazy part about NVIDIA. Even crazy enough, I really think if you buy this stock right now at their current prices, you will, even though it looks like it's at all-time highs and stuff, the crazier part is I think if you buy NVIDIA today at their price, I still think on average for the rest of the time, potentially, but at least through the next 5-10 years, you should get 10% plus S&P 500 type returns, 8 to 10% of your money back a year, even if you buy it right now prices, because NVIDIA's not expensive. Here's why. This is the crazy part. We always like to look at the forward projections here. Their current PE is expensive. They trade at 50 times current PE, if I remember. But it's when we look at next year's earnings. Check this out right here. Yeah. Oh, my thing just disconnected for a second here. There we go. The forward PE on the right there is a 28. The right now PE is at 46, but the forward PE of 28 is very fair. And that's using this EPS projection. And they always slightly beat on EPS, but literally there's still going to be triple digit EPS growth, or nearly, because the EPS is going to go from 76 cents to $1.56 if the analysts are right. And this was a record EPS quarter ever, $1.30. It's never even been close to $1.30 before. They made $1.30. Again, EPS is the same thing as net income. So that $1.30 of EPS is the same as $32 billion of real after-tax net income. That's after they paid their $6 billion of taxes. They really kept $32 billion of after-tax net income, which is the same as $1.30 of EPS. But check this out. And they always slightly beat on EPS. It's supposed to hit $1.46, then $1.56 the quarter after. So that means the earnings are up and to the right. This is a company, if we could look at their net margins, they literally keep 56% net margin. So if you go spend $100 on an NVIDIA chip, they pocket $56 from that. So, and they're, everyone's trying to train their own LLMs, data centers, cloud backlog, LLM demand, all benefit NVIDIA. The supply chain issues, the memory shortage. So yeah, NVIDIA has a phenomenal balance sheet. They print net income. I think, honestly, not financial advice. You buy the stock right now, you should get that 8 to 10% of your money back a year. We can see, they have a small automotive business. They have this automotive software they're building up, kind of a Tesla competitor. Their GPU market share is a 24%, and their data center revenues up and to the right. So let me get my water here. Let me get, I'm so behind here. I'm so sorry, guys. I'm going to get to PGY. If Plasma, definitely remind me to get to PGY. I'm going to get to KKR and then Monday and CSX. I have Meta. Hey, we just looked at Meta. Yo, we just did a super deep dive on Meta. By the way, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. If you scroll back like literally 10 minutes, I spent a lot of time deep diving in Meta. It's like the second stock we went over. Yeah, that's the best way to support me. I sell nothing. I have no course book, WhatsApp. I don't coach. I literally sell nothing. Only way to support me if you wanted to is I'm trying to build on my YouTube channel. Watch a stream from YouTube. It's called Nathan Robert. Link tree in my bio. I'm streaming on YouTube and TikTok. I'm reading both chats. But anyway, here's KKR. This one is also cheap. If we look at this one on next year's projections, let's actually pull that up right here. Oh, and I got to give a portfolio update too. I keep forgetting to do that. What do you think of nuclear stocks? Yeah, CEG is the best nuclear stock of all time, and I don't really like any of the other smaller ones. But yeah, look at the forward PE on this company. It's a 17. They're right now PE looks expensive, 55, but the forward PE of 17 is very fair. Let's see what they actually do. So they're an asset manager. That's a high margin industry. Whatever their customer assets are, they keep like 2 to 3% of the total assets. They're an insurance, net premiums, policy fees, strategic holdings. I like how diversified that they are. And yeah, check out these EPS projections. So they had a negative $1.20 EPS quarter, and it's going to go to $4.40. So yeah, and they had a crazy beat this quarter. Basically, earnings before interest, they had a little one-time adjustment on their EPS, but the EBIT beat by a crazy amount. Revenue expectations are going to go from 1.7 to 2.24. They already print a bill of net income a quarter. So I actually love this stock. I should actually put them on my watch list. Let's go see what their net margins are really quickly. Net margins, whoa, that's insane. They keep 33% net margin this quarter. They've kind of averaged it out here. They're always keeping around 30% net margin. So, yeah, the asset management industry is high. I actually own T. Rowe Price Group, and that one has not done too well. It's another kind of asset manager. I like that one. This is a pure dividend play. They have like a 5% dividend yield. Okay, actually, they've done terrible. Actually, let me zoom out. They're the same prices they were back from like before COVID, I think. Actually, yeah. Oh well. All right. Let's see right here. CSX. I think this is a railroad company. Yeah. So this is an American railroad. There's never going to be any new railroads. No competition. Every railroad is like a local monopoly. And it's a share. Basically, the railroads are a shared oligopoly. CSX, let's see what their valuation is. I like Norfolk Southern too. It's a cheap one, a 20 forward PE. I remember these were really benefiting back in 2022 from all the supply chain logistics issues, like ports being shut down or whatever. But yeah, they have a small trucking revenue as well. But yeah, 95% of the revenue is literally just their railroads. So pure railroad play here. Looks like the revenue is slightly down year over year, 0.8%. And the profits are down by 7%. So that might be why they're at a 20 forward PE, but that's still cheap. And you get a good dividend yield, I believe, here. I want to check if they do buybacks. Yeah, if you buy the stock right now, you get a 1.4% dividend yield. They raise it every year, and it's only a 26% payout ratio. So they actually have a lot of room to raise their dividend if they wanted to. So here's how you check if they did buybacks. So the net income fell by 22% year over year, but the EPS only fell by 19% of the company. That's great news. They bought back 3% of the company on top of giving a 1.5% dividend. They're very shareholder friendly. What stock did you say was a long-term play? The Google or well, actually, yeah, definitely Google. Hold on. Oh, geez. Okay. Oh, it's fully back. Okay, sorry. The stream definitely will lag for you, but it's fully back now. I see the kilobytes, so that just happens sometimes. All right, sorry. Maybe refresh, but okay. Let's see here. Hey, Andy, what's up, man? I love to discuss. Hey, I'll check it out. Bet Andy, I'll check it out. I always forget to look at my TikTok DMs, but you know what? I got you. I'll check that out. So yeah. Anyway, CSX is a nice one. Can you check Upstart? Oh yeah, Union Pacific is another great one. Union Pacific is just like CSX. Union Pacific might even be the safer play. I don't know. Yeah, if my Wi-Fi just doesn't allow me to stream, then I might have to. And by the way, if you hit the follow button, we stream every day. I sell nothing, no, literally nothing. Please watch out for people impersonating me. We already had to. There's like 3 people we kick out because they have the exact same username and like profile picture of me. This is my only account. I'll never follow you or DM you. I sell nothing. I'll never DM you. So anyway, here's Upstart right here. This is like an auto loan referral business or something like that, if I remember. Yeah, platform and referral fees. I remember it's like booming. Yeah, look at this. The year over year revenue, it's a record 216 million. It's never even been close to that before. So the revenue's up 61%. Last quarter's up 105, 45. Are they profitable yet? That's the question. I remember this one was losing money for a long time, like a lot of it, but for the first time ever, they made great money. 32 million. So that's why if we look at the forward PE on this company, they look super expensive. It's because they just got EPS positive for the first time ever. So you really don't look at the PE, and they've been beating on EPS like crazy. So I'm actually surprised why this stock hasn't been doing too well recently, because the fundamentals are there. It might just be that it might be slightly expensive even at this price. Yeah, expectations are up and to the right. Yeah, they're supposed to stay at like 20 mil in net income a quarter. That's 100 mil a year. Actually, yeah, Upstart's actually really good. Uh, Nothing bad to say about that one. I'd probably keep it as a small position. Dollar. I'd even dollar cost averaging at this price. You look at IREN with like your input. And these are all Nvidia owns all these names right here. Actually, I don't know if Nvidia owns Iris Energy, but yeah, I wanted to get back to CoreWeave here or something too. But yeah, this is Nvidia's portfolio. Nvidia literally owns stakes in these companies. Nvidia has a huge stake in CoreWeave, APLD, and Nebius. Those are their 3 largest holdings, and these are all data center stocks that are pumping orders to Nvidia. Nvidia basically took a stake into them to give them money just to literally buy back Nvidia chips. It was genius for Nvidia to do that, literally genius. And anyway, let's go deep dive into Iris Energy. They do exactly what CoreWeave does. I don't love these in the long run because they're kind of the bag holders, but I think they'll do great for the next like through 2030. But because there's kind of this depreciation thesis. Let's see if there's any news here. I still believe right now Iris Energy, around 70% of their total revenue is still Bitcoin mining. But here's what these Bitcoin mining companies are doing. They're converting it from, they basically, this company, to keep it really simple, they own a bunch of GPUs in a data center. Nothing proprietary, nothing special. They just own a bunch of GPUs in a data center. And right now, they used to do all 100% mine Bitcoin. They just mine Bitcoin, but these GPUs are in such demand right now from cloud computing businesses like Google and Microsoft. And I think they even got a contract with Microsoft to rent out the GPU capacity to back the Microsoft Azure cloud. So they have these huge contracts, and look at the revenue. It's going to go to 280 million in 2 quarters. Let's see that actually. Yeah, that's 200. Look at these year-over-year comps on the top line. It's incredible. Triple digit growth for the past 4 quarters in a row. And it's not really going to slow down either. But they're not crazy profitable yet. Like, they did lose some money this quarter, but they did make net income all 3 of the other quarters. So it's interesting, but it's definitely expensive, and it's a tough one to pay. For it's. Uh, are you using Moomoo app or computer? I'm on my phone right now, and I'm screencasting it to my computer. But yeah, if you want to, or what is this app? Yeah, if you want to get this brokerage I'm on, or this is a app where you buy stocks on the phone, or if you want to use my affiliate link, it's in the link tree in my bio, very first link there. My favorite app to analyze stocks on and buy stocks on. It's free, costs nothing, no commissions. Uh, I own this stock too. They're publicly traded. I actually, by the way, all these brokerages are all in the link tree in my bio. Robinhood's the second link. Moomoo's the first link. Weeble's up there too. But yeah, I'd recommend Moomoo the most. Okay. Um, let's see. Oh yeah, let me just do a quick portfolio update because I haven't done that yet. And it's dang, we're already 30 minutes in. What's up, y'all? And Refurb Rhythm. Thanks for the 4 roses and OLP Papa. Thanks for the 3 goats there. I do appreciate that. Here's our Weeble portfolio. We haven't really done great. We're only up 18% all time, and we're slightly red on the day. I Reddit tag. Look at that. Reddit fell 9. UiPath 3. Robinhood was down 6.6. Rough. Dude, Iron Mountain has been crushing it. Y'all, I've been talking about this REIT for a while. They had a little bit of a short-term hiccup, but fundamentals always outshine in the long run if you're patient with these great names like Meta. I think if you buy Meta right now, and even Amazon, if like just have paid, like I just have so much faith in these companies that they're going to do good because the financials give me that trust. But yeah, anyway, that's how my Weeble portfolio did. Here's our Robinhood portfolio really quickly. I'll kind of go quicker here so we can look at some more of your stocks. Hey, the very first stock we looked at is Netflix. The YouTube replay I think is a fun one. Look at PRM. Perimeter Solutions, I love that one. So yeah, here's my dividend only portfolio. Every stock in here pays a dividend. Only stock that was down on the day was Google. It's really the Mag Sevens that's been struggling, the mega caps. And it's the medium caps, kind of like the dividend stocks that have been doing great. Yeah, here's our Roth IRA as well. Nothing real special here. We haven't done great in our Roth IRA. Oh yeah, here year to date we're already up 4%. Past year we're up 15.9%. But the real winner was our Moomoo portfolio. I kid you not. Look at Comfort Systems. I've never been up this much. Nearly 9 grand. We're up 203%. We bought this stock. The chart is like one of the best performance stocks in history. Like I can't believe it, but we bought the dip on them way back. This was not even that long ago, April 2025. So we bought it during the April tariff dip, and now it's just like crazy all-time high today. So Comfort Systems is the reason we're up so much. Same with oh yeah, we bought it. I forgot to mention this. We bought a share of Amazon yesterday. I think the risk reward is so good. You should get S&P 8-10% returns. And oh, I didn't even cover Amphenol stock yet. Yo, Google is a man, I'm excited. Google is a major customer of Amphenol. Google's TPUs use a bunch of Amphenol's cables. They're one of their main suppliers. Same with NVIDIA. NVIDIA, they're one of the top small cable, copper cables providers for NVIDIA as well. And this stock hit an all-time high today. They're an acquisition behemoth. They announced another acquisition. They bought 25% of the stock. I went and looked up ADC India. They're like an international stock, but they're up 600% since like 2019. And they bought a 25% stake in them. The market loved it. I think it was going to be accreted to the EPS. Same with the CommScope acquisition. That's why they gapped up on this day. And I remember I was like, I don't. If we kind of ignore that, I was buying this stock at all-time highs, raising my cost basis like crazy after it's already gone up so much. I'm just like, this is the kind of stock they're just going to continue to climb higher. I just can't believe it. Okay. Hey, what up, Adrian? What is Powell? They're a highly specialized electrical engineering projects play here. You know, really a financials play, but a lot of their backlog right now are data centers, these custom electrical work projects. They do switchgear solutions mainly. They just did an acquisition of Remstack. They're crazy. They're not even. Here's why. Even if I wasn't allowed to never sell them, I wouldn't be trimming or selling this stock right now, even though they hit an all-time high today. They didn't close at it, but the forward PE is a 26, and they're worth 4.9 billion. They have 480 million of cash, so basically 10% of the market cap is still their net. Oh, if net cash, I meant to say. They have no debt at all. $1.5 billion backlog. Incredible margin expansion there. Been asking, can you do seal? Hey, if I don't know what that is, if you have a stock, can you give me the ticker symbol? We can check that one out. Let me check out Perimeter Solutions right here. This is a great number one in the world, basically aerial fire retardant play. They keep California safe. They do aerial surveillance, and they're the only ESG, like in California, a lot of other states, the only environmentally approved aerial fire retardant solutions, like that red powder you see from planes. They're the only one that basically is allowed to sell this. They're the only approved one. Yeah, so case study, Nebraska Airport Fire Brigade. Anyway, this is like a niche industry that, like, it's a cool stock, and they're not expensive either. So anyway, it's kind of like a niche-y, their investor presentation is incredible. They aim for like 15% returns a year. They just did this acquisition as well. I wish I could find that news for you. But yeah, acquisition of medical manufacturing tech. Yeah, anyway, Perimeter Solutions is a really interesting name here in a kind of niche industry. I'm actually upset. I used to have a very small position in them, and I did sell out of it for another stock, and I wish I didn't. That's some of my biggest regrets is selling out of great companies. What's this one here? Oh, hey, Eli Lilly. Yeah, I saw Eli Lilly fall today. I just want to see why. Actually, they didn't fall too much. I remember they were down 5%. Oh, yeah, the FDA delay. So check this out right here. FDA delays Eli Lilly weight loss prescription decision until April 10th due to safety and efficiency concerns. So you know what that's bullish? That's bullish Novo Nordisk. I want to see if Novo Nordisk is up because they have the oral. Nope, they're down too because they have the oral Wegovy pill that's already on Amazon. Eli Lilly is a big competitor to Novo Nordisk. Looks like Eli Lilly acquires a 12% stake in Aktis Oncology for $100 million. Eli Lilly and Novo Nordisk face antitrust lawsuits over alleged discouragement of compound GLP-1 medications. All right, that's whatever. Doesn't hurt Eli Lilly. I think they're worth $1 trillion or $976 billion. They're expensive, but this company certainly deserves an expensive forward PE because they're so growthy. They're trading at 36 times next year's net income. Now that's like the cheapest they've traded at since 2021. On a forward PE because the current PE is 50, certainly expensive. But that's when you look at the forward PE, they're not crazy expensive when you use next year's net income. Plus, it's using these orange lines. They always beat. Yeah, the EPS is going to go from $3 to $7.30. They're still going to be 100% EPS growth rates year over year. They had a massive beat this quarter. Whoa, like a 20 to 30% beat. Yeah, look at the revenue. They expected 16 bill. They did 17.6. A lot of this is from the growth in Zepbound, which is their weight loss prescription. Look at the revenue. It's an injection. The revenue is up 53 and the net income, the profits are up by 86. So they're expanding margins. Ooh, another thing, they did kind of agree to lower the cost of some prescriptions to but with the administration, but they get tariff exclusion where they're not affected by tariffs. Okay. Yeah, sorry if I'm missing some stocks here. Oh, LAES. All right, let's get to this one. All right, let's do Seal SQ. This guy's been asking. I got him. I'm so behind here. What up, Remco? Remind me to get the Red Cat, CTAS, and Okta. Okta, they're just not getting profitable. So there's a lot I got to look at here. So here's Seal SQ. We're going to be live for another hour. So, okay, they're worth $830 million. So that's a very small market cap. You got to be careful with these small caps. IPO'd in 2023. They're way lower. But this company basically is just getting so this isn't a U.S. company because look at that. They report in halves, so they don't report in quarters. Where are they headquartered? So they're headquartered in Switzerland. They got 7 employees in the middle there. They're headquartered in Switzerland. So one thing that's interesting to me, though, is these are the half estimates. It's going to go from 5 million to 15 million. Again, the whole company's worth 700 mil, so that's why the market cap is there. But $15 million for the half. So that's $30 million of annual revenue because the right now revenue sucks. It's negative year over year. The full year 2024 was way lower than 2023. So anyway, I'd just be careful here. $30 million of annual revenue. That's going to be the same as it was in 2023. It's some semiconductor small cap. I'd be careful. I trust my money with NVIDIA a lot more, and they're burning through net income, so they're not profitable yet. But it looks like they did just fortify their balance sheet, but it's because they were super leveraged. Look at that. They had a bunch of leverage. How did they get out of all this leverage when they have when they're losing net income every quarter? Well, let's go to their cash and financing activities. They're diluting the life out of you. They diluted you by 90. That's over 10% of the market cap they diluted you by because they're only worth 800 mil. So that they dilute you by 10% after another 5%, then another 8% from those two. So it's a tough one. It's a tough one to trust. I'd probably keep the allocation of that one low, but I wish I could give you more thoughts on them. They're just getting started here. NVIDIA's the unbelievable for real. Red Cat Holdings, this is one of my favorite drone plays. If I had to pick one, this one really interests me. Let's see right here. Red Cat announces preliminary guidance revenue. Let's check out the EPS or the revenue expectations because I remember this company just now got their first ever order. So look at this. The revenue is $9 million this quarter, $9.6 million. That's a record revenue, $9.6 million. But look at what analysts are expecting next quarter. $22 million. That's going to be an insane new record. And they're sustaining that because the quarter after it's going to be $24 million. So basically call it $100 million of annual revenue. What's the market cap here? It can never escape. Look in the top right. They're worth $1.67 billion. I mean, what is this? Hey, Adrian. But yeah, Red Cat, this is your drone play. They just got NATO approval where all the NATO members, I think some of the revenue comes from Ukraine, or I don't know, they got like Ukraine orders for their Black Widow drone. Maybe I can go to their website real quick. Um, they got a bunch of military contracts and stuff like that. Yeah, they kind of they're a drone play. Oh, that's a kind of cool looking drone here. Uh, okay, anyway, uh, I like the future growth of the revenue. It's certainly expensive at this price. A tough risk to award. Hey, oh, let me get to Okta and Casey General Stores. I think that one's been one of the like best performers of like the year, like surprisingly. So here's Okta. Every like in my college software today, every time I boot it up, I see the big Okta logo in the bottom left. So some sort of cybersecurity stock. I think they do like website DDoS protection. I don't know too much, but what we can look at is the revenue and the net income growth. Because if we look at their net income, they're finally really profitable. If it would load for me real quick. There we go. So yeah, look at this. If we go to their net income right now, they're actually making a good amount. Look at the year-over-year growth rates. They're making, 40 to 70 million in net income a quarter. Because if we zoom out a year ago, you couldn't buy this stock down here. They're losing 100, sometimes more, 200 million net income a quarter. But now they're actually making net income every quarter, and the EPS projections are up and to the right. They always beat on their EPS projections by a lot. Like they expected 13 cents, they did 24, and it's going to go to 28. And they always beat. So it's anyway, they're doing everything right. They're beating on it. They triple beat by a good chunk on every expectation every quarter. I don't know why this one is struggling. It kind of reminds me like this chart looks exactly like a DocuSign, like a Roku. It's maybe just like a Zoom as well. It's maybe just one of those software names that still hasn't look at DocuSign right here. It looks kind of the same. It had this big gap up in 2021. I made out kind of like a bandit on this one. I bought a bunch of the stock down here at $40. This is one of the stocks we sold, but then I ended up selling it because just the moat here wasn't there. Dang, they were down a bit today. What was the other? It doesn't matter. PayPal as well. PayPal's another one where it's like a good financials, but it just like rallied up in 2021 where the forward PE. Yeah, what's the forward PE on Okta? Let me check. I didn't check that. A 93. So yeah, the current PE is an 83, forward PE is a 93. So they're actually supposed to go down in net income a little bit. I don't know. I like the trend of their numbers. No one asked about Okta. Yeah, hey Ronabot, what's up, man? That's actually on my YouTube stream. I try to read both chats here, and I'm on a little bit of a backlog. If you have a stock you desperately want me to look at, like we're gonna be live for another easily like probably an hour. If you go to my YouTube stream, I'll for sure look at it. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio. You can just type it into YouTube though, Nathan Robert. I'm streaming on there. You can also rewind it, but I am also checking the. Here's Vladimir said CAT. Let's check out CAT and check out BOX. Hey, we'll do BOX and Core Medics. Hey, I just bought a slight bit of them. Not too happy with Core Medics right now. Wow, look at Caterpillar. This one is at an all-time high today. And there's just a lot of tailwinds for these industries right now. Caterpillar expands AI partnership with NVIDIA. Multiple analysts raised Caterpillar price targets, citing improved margins and AI-driven growth. There's just like a lot of upward revisions to their EPS currently. Because if we look at the forward PE, I mean, it's not crazy expensive for a stock that's at an all-time high. The risk reward isn't there. But if the thing is, if I was a shareholder of this company, I wouldn't be trimming or maybe sell a slight bit, but I really would not. I definitely would not fully sell out of this company. I actually probably wouldn't even like trim it at all if I could help it. A 31 forward PE. They have big industry diversification. Energy and transportation, construction industries, and the resource industries. They make these heavy machinery, and there's like a construction boom, and they have a 0.9% dividend. They raise their dividend every year, so basically a 1% dividend yield. I really like Caterpillar. Let me check out Box real quick. I don't know what that one is. I don't think I've ever heard of this stock. Box Inc. Okay. They're small. They're worth $3.8 billion. They IPO'd in 2018. Okay. So let's see what this company actually does because that's what matters here. So their current value, they currently trade at 21 times PE, but the forward PE is 109. So what I'm going to guess is they had some slight one-time adjustment to their net income. Oh, yeah. So exactly this. So look at this. It says they made $194 million that one quarter, which made them a bunch of EPS because EPS is just net income. But if we go to actual operating profit here, they didn't actually make that. So that's why this one might be expensive, even after this dip, 106 forward PE. That's not exactly cheap. And it's a single digit grower, but the revenue growth is growing. Revenue's up 9.13% year over year, and their net income positive. Ignore the 194 million quarter. They made 12 mil in net income. Oh, but look at this though. That's still there's year over year declines. That look at that. They used to make but it was 12 million down 6%, 13 million down 34, 8 million down 52. And that's so some insiders taking profit here. The net income was 12 million, but just to the shareholders, it was only 6.9 million. So, and dang, that quarter got down to 3 million. Nothing's really blowing me away here. Bit of a leverage balance sheet, but I guess I do like the revenue growth is growing, or the revenue is growing, and they are net income positive every quarter. Like they are making net income every quarter, just not that much. Hmm. But it's not the end of the world. It certainly is not the end of the world. I wouldn't buy much of this one. I'd probably keep the allocation of that one low. Okay. Um, which one should we do here? Um, Microsoft and actually Hades, what's up? Let's do Microsoft. I haven't looked at them all stream, and this one is a stock I can this is a buy for any solid portfolio at right now. It's probably like this is probably I'm glad you recommended this one because I super not financial advice here, but I really recommend this stock for anyone. Even if you buy fractions, like I just bought zero point 0.1 shares of Meta because I didn't have the cash, but Microsoft is worth buying at this current price. They're trading at 27 times forward earnings. So 27 forward PE for Microsoft, Mag 7 behemoth, better credit rating than the US government, trading at 27 forward PE, AI toolkit of the future, ChatGPT. They're investing in Anthropic too. Eh, The Microsoft Cloud is a behemoth. So they actually have right now 82.5 million Microsoft 365 subscribers. That's this portion of the revenue right here, their business productivity. This is that they've converted from a hardware business selling these PCs to a software business. Like think Office 365, OneDrive, all the Microsoft suite products. This does an annual revenue 120 billion, and it's a software, so it's really high margin. So their software business is at an all-time high, 120 billion of annual revenue. That's just incredible. And they have this intelligent cloud. It's their Azure cloud business. It's at a record right now. Also does over 100 billion of annual revenue for them, and you can see the trend there. It's incredible. And here's their PC sales. The commodity. This doesn't grow. This is same amount of revenue as it was in 2019. This is just their actual like physical PC sales. That doesn't matter. If we go to their combine all that, the net income they make every quarter after paying 8 billion of taxes every quarter, like this is their real after-tax net income. They make over 25 billion of after-tax net income a quarter. Incredible. And that's how they can invest so much in the future. If we go to their cash investing activities, they spent I didn't realize it was that much, $35 billion this quarter. On investments, 30 billion last quarter. So these and look at their free cash flow, bro. This is why you need on Microsoft 45 billion. It's just nuts. And they netted 28 billion in net income. They have a 36% net margin. Like this is the best software name out there. A lot of software names are getting hurt right now. You look at Salesforce and it kind of drags Microsoft on along with it, but Microsoft is worth buying at current prices. I think if you buy it even right now, you still will get, in my opinion, not financial advice, 8 to 10% of your money back every single year for probably the rest of the time buying at Microsoft today. That's one of my top picks for 2026, like for real. So let's check out Citibank right here. How's it going, Nick? Some of the banks have been falling, but they're up 5% today. They recovered. Wow, let me look at the 5-day chart real quick. Wow. So yeah, they basically recovered from all the bad news. Citigroup reports December 2025 credit card delinquency and charge-off rates. Citigroup announces job cuts and shifting cultural focus. They're cutting jobs, that'll improve their margin. Let's see here. We're getting you weekly news here. Analysts raise price target to 147 and it's 117 today, citing strategic improvements in buybacks. Ooh, I want to go check out their buybacks. Okay, so Citigroup to cut 1,000 jobs as part of $20,000 workforce reduction through 2026. Wow. Citigroup confirms $20 billion stock buyback program continuation in 2026. Let's see if they make $20 billion net income a year. Let's go see if they can afford that. So net income, they they nearly do. Wow. If you kind of just average it out, this is a little generous, but if we average it out to 4 billion, I mean that's 16 billion of after-tax net income a year. What's this app? Hey, thanks, Jello. This is a brokerage right here, Moomoo. It's a brokerage where you buy stocks on. If you want to use my affiliate link, it's in the link tree in my bio, very first link there. You can just type it into Google, though, brokerage called Moomoo. But yeah, affiliate link in the link tree in my bio, first link. But yeah, Citigroup, they print easily 3 to 4 billion net income a quarter, and they pay a dividend. You get a 2% dividend yield as well, and they only have a 33% payout ratio. So that means they have room to even raise their dividend more. Let's go see what the forward multiple is, because usually these banks are cheap. It's so cheap. It's just crazy. The forward PE is an 11. So I think that even means this could stretch up to probably like a 12 or 13. Like there's still like 30% upside probably in this stock through 2026, But here's some kind of bearish news. Yeah, the administration proposes a 10% cap on credit card interest rates. Citigroup opposes this, citing economic concerns. Whoa, I didn't know that. Citigroup launched structured products linked to stocks, indices, and commodities. Citigroup completes Russia exit with sale of AO City Bank, incurring a $1.2 billion pre-tax loss. So that explains the net income this quarter. Maybe they actually made $1.2 billion more of net income this quarter to $4 billion, but they had that one-time adjustment because it had to have been, because that's how they're at 11 forward PE, because that's totally what happened. Yeah, let's see here. Oh, Casey, how did I forget to get to Casey? My bad here. So Casey's General Stores, this is just a boring stock. It's always the boring stocks that do great. You look at Walmart, or you look at Waste Management, or there's a lot of examples. But Casey General Stores is at a crazy new all-time high right now. Just a boring, general store. What does a company do? I guess they just own like general stores, kind of like a Walmart, I guess. The forward PE is a little expensive, but not nuts for considering how good the stock's done. The forward PE is at 35. So the risk to reward is definitely tough buying at today's prices, but this stock looks like Nvidia. That's crazy. And if we go to their bottom line right here, so their bottom line is really improved. So the net income's up 15%, 20%, 13% year over year. Revenue's up 15. Wow. So someone said, they're a gas station. Casey's General Store is a gas station. And what's impressive about that is a lot of these oil and gas names like a Murphy USA, a Circle K, their revenue is really far down, like down to 7-10% year over year. But on Casey, their revenue is up 15. And the margins are steady too. So, and they pay a dividend. The dividend yield is probably super low. Yeah, 0.34% dividend. The yield's only low because the stock has gone up so much. And another 3.5% today. That's nuts. Congrats if you got that one. See you, Nick. We're live again. Yes, sir. I try to stream every day. I've been really busy with school. I just had to pay $2,900 in tuition today, so I'm not going to be able to deposit any more money for a while. So that wasn't good. But I didn't care because my portfolio hit an all-time high. Compare with SoFi. Ooh, I love SoFi. Actually, remind me to get to SoFi and SKYT. I'm so behind here. Actually, I'm on SoFi right now. Let's actually check out SoFi. Ooh, and Taiwan Semi. What up, Marcus? Yeah, we definitely got to look at Taiwan Semi. What do you think of Carlsberg? Hey, what's the ticker symbol FIS for Carlsberg? I've never heard of that stock before. So here's SoFi Technologies. I am a shareholder of this one, so I'm totally biased. But here's why SoFi totally deserves a 45 forward PE. Super expensive. I would not allocate new money to this stock right now. I'm a shareholder, and the risk reward isn't great at today's price. But here's why they deserve a 45 forward PE, though. And this is why I wouldn't, same thing, if I was a shareholder, and I am, I would not trim or sell at this price. I definitely wouldn't. There's still a lot of upside here. But the risk to reward to allocate a lot of money, like I'd maybe make SoFi, if I wanted as 5% of my portfolio, I'd maybe make it like 0.5% today and make it more as it falls down. But yeah, if we go to SoFi, their financial services specifically, the growth is insane. This is what justifies that high valuation, in my opinion, and it's going to continue to justify the high multiple as if this keeps growing. Their financial services business is up 76% year over year. After grew 101, after grew 141, after grew 280. I can't explain to you how impressive that is, this growth. And no analyst expected this growth to be that growthy. And we can see the analyst expectations. That's the orange line here. They beat on every quarter. They beat on revenue. They beat on EPS. And the EPS expectations are just up and to the right, going to continue to hit a new record, going to go from literally 3 cents to 12. So there's going to be the EBIT's up and to the right. Like everything here looks amazing. They have growth. Like this is why I really think people are taking SoFi serious. They're making over 100 million net income a quarter. The revenue growth is there. So, all bank rating SoFi to sell. Hey, that's, it's always financials that outshine in the long run. But yeah, I'm certainly not too crazy about buying SoFi. SoFi raises $1.5 billion. And yeah, here's what SoFi, that's what they do. They're a lender. So basically SoFi issues money or issues shares, raises money, and then just loans it out. And they're actually honestly smart for doing it at their current stock price. Their lending business also hit a record 25% growth after 14, after 16, after 44. Like it continues to streak. So all their businesses are just booming. But yeah, they did issue shares, 1.5 billion worth. And they did an evaluation that I'm okay with. All right, let's see here. Hey, what up, Trigones? Why are you saying sorry? Let's see. If you got a site you may look at, let me know there. All right. Ooh, I don't know if I'll be able to find this one. Carl G. Wait, is it this one right here? Is it a Malaysian company? Ticker symbol 2836. Let me know if it's this one. And I'll type in the name a little later because I wanted to get to Taiwan Semi real quick. And I also want to get to BTG and Walmart. Yo, Walmart's doing great. SLDP. You want to talk about stocks? Talk about stuff that revolutionizes the future. That's what we're kind of doing here. So anyway, let's see. Taiwan Semi right here. This is a great, buy, never sell stock. And the current valuation of it is really fair. Check out the forward PE. It's a 24. That's why there's still, like, this forward PE, in my opinion, could easily stretch up to a 29. Or to a 30. Like there's crazy upside, even though the stock is at an all-time high. It's certainly tough, and I really wouldn't buy the stock at current prices. But it's another one where you can't sell this name because there's so much growth. Let's actually see. They reported earnings today, literally today. Let's see what they reported. So they beat on revenue, they beat on EPS, and on EBIT. And check out the projections for the future. EPS is going to go from 247 to 348. The revenue is going to go to $37 billion. I mean, the growth is crazy, and they have insane margins. Check this out. They have a net margin, and it grew. I can't believe it grew again. It grew 36% year over year to a 56% net margin. So that means they did total of revenue of $33 billion. Out of this $33 billion of revenue, they kept to their bottom line after paying taxes of $19 billion. Incredible. 56% net margin. That net margin expansion grew 36% year over year. So phenomenal balance sheet, deleveraged it, and you get a good dividend. You get a 0.9% dividend, even if you buy Taiwan Semiconductor stock right now. They have the craziest market share. They're hiking prices. Oh, I am very behind here. Let's do Skywork Technologies, and then InnoData. I got to get to InnoData. That one I like. I don't like their valuation at today's price. Oh yeah, dude. I should. Let me pull up one more quick set of news for Taiwan Semi right here. Yeah, I think they're expanding their Phoenix fab. U.S. to reduce Taiwan tariffs to 15% and $250 billion semiconductor investment deal. I mean, hey, that's got to be good news. record Q4 and full year 2025 results, projects 30% revenue growth for 2026. Look at this. Yeah, right here, the very middle here. The second line, Taiwan Semi plans to expand U.S. investment beyond $200 billion with 5 additional facilities. They're not going to lose to Intel. Because right now, Taiwan Semi, all NVIDIA just designs the chips. They're all manufactured in Taiwan Semiconductor in Taiwan, 6 feet from China. And that's a risk. And so they just did, this is genius. It's all making sense now. They just did a deal with the U.S., a $250 billion agreement with the U.S. to reduce tariffs for Taiwan Semi, while making 5 additional facilities in the U.S. Anyway, let's get to Skywater right here. Skywater Technology, this one, they've done great the past week here. I wonder if we get news or not. They're just so tiny because they're only worth $1.5 billion. They don't have a forward PE, but they do wafer services, time and material cost, fixed price contracts. So look at these year-over-year growth that's expected. The revenue is going to go from 61 to 147. So that might be why maybe the stock is pricing in that growth right there, because they beat on revenue. They expected 135, they did 150. Did they buy a company? So yeah, I'm guessing they did, because look at their balance sheet. Their assets went from 330 to 780. How'd they do that? Well, if we go to their cash from investing activities, I just stopped that for a second. That's not good. Okay, we're back. If it lagged for 5 seconds, that was my fault. Okay, but yeah, if we go to the cash from investing activities, I was saying they just did an acquisition. They just bought a company. So that might have been what led to some revenue growth. But anyway, there's going to be good year-over-year growth rates of the revenue. I don't know. I'd just be careful with this one. Wafer services, oh yeah, so this must be from the acquisition, because no business just does that. So that wafer services, wish I could give you more thoughts on that one. That was probably such a boring answer. I do. I, oh, dude, I'm so behind on stocks. Actually, I like that there's this many people in the chat. I appreciate y'all participating on YouTube and TikTok. And I'm so sorry if I don't get to you the stocks. So here's Walmart right here. I guess this brokerage is telling me that there's a little technical analysis right here. I guess they're saying there's a bullish continuation triangle, rise probabilities, and 94% chance. But that's not really what I'm not great at technical analysis. I like looking at the fundamentals. And check this out right here. Walmart just joined the QQQ. There's so much good news this past week. This is why Walmart's at an all-time high today, and they've done great this past week. They just continue to hit an all-time high. So Walmart joins the QQQ, the NASDAQ 100. So a lot more passive money is just going to flow into Walmart stock just from that. But that's not really a big long-term catalyst. But here's a great one. Walmart partners with Google to launch AI-powered shopping via Gemini platform. So you can actually look up something on e-commerce and find a Walmart product sponsored or something, and Google will get a commission. I don't know. And look at the next line. Walmart expands drone delivery service to over 150 stores. Imagine that. That's actually crazy. 150 is a lot. But anyway, that's all news. Let's go look at their actual revenue. And, they have 2 businesses. They have their main Walmart stores, and I really like their kind of Costco competitor store called Sam's Club, if anyone's heard of Sam's Club before. And my internet has just been acting up, so that's not good. Oh, there we go. Okay, well, anyway, their net income, this is the crazy part about Walmart. They're easily making $5 to $7 billion of after-tax net income a year. They also have one of the best, most quality real estate portfolios in the world. In the tri-state area of every single city and stuff, they have the most valuable, irreplaceable logistics hubs that are in the most demand, that just can't be replaced by new ones. But anyway, Walmart all-time high today. Certainly wouldn't buy them at today's price at a 42 forward PE. That's more expensive than all the Mag 7, but I can see why Walmart's done so good. It does good in a recession, just like McDonald's. In a recession, people go to Walmart more. And anyway. Why is it showing 2026? What was showing? That was some companies report in fiscal years, so that it's same 3 month. It was just little. Oliver said IQD, Denmark. I just sold my Zealand Pharma stock. I looked up IQD. I can't find that one unless you're talking about Wisdom T International Quality Dividend Growth Index. So this probably is. So this is an ETF right here. Let's check it out. An ETF is just a basket of stocks. It diversifies your money up for you into a bunch of different names. So look at that. It's all international stocks. I actually like these names, like Toyota Motor is the largest one. And I love LVMH. I like buy that one individually. Novo Nordisk, that weight loss company, that's Ozempic, ticker symbol MVO. Deutsche Telekom, they have a 50% stake in T-Mobile. L'Oreal. So anyway, that's your international ETF. And it looks like they pay dividends too or something like that. CABGY. Yo, are you still in here? Let's check this one out real quick. Oh, Talent Energy. Remind me to get to Talent Energy. And hey, Aaron, what's up, Aaron? Good to see you. And Larry, they started drone delivery in Florida. Oh, for Walmart. Yeah, that 150 store expansion with drones is crazy. So this is an international name. They're worth $17 billion. Carlsberg. Okay, so it's a Danish company. So we'll convert the currency to US dollars just to get a better idea here. So it does all the revenue. So yeah, look at this. Even though they're headquartered in Denmark, that's only 6% of the revenue. So other countries are 65%, China's 18%, UK's 10%. Let's see what they're making. So last quarter, they lost $670 million. Was that a one-time adjustment? It was. So the core business, aside from that one-time adjustment, which I'm guessing is acquisition related because their assets just bumped up a bunch. But anyway, oh wait, forget everything I just said. This is data from 2015. Okay, so forget everything we just looked at there. We're just going to go right here because these are the real numbers. So they're a Danish stock and we don't have their current financials, but we do have this right here. And these are 2025 Q2. All this stuff down here was 2015 old numbers. I guess here's their balance sheet. But anyway, EPS projections, they're supposed to stay net income positive for the next, full year 2025. So for the full year 2025, they're supposed to make $1.60 of EPS and then $1.86. Stock price is 26. I wish I could give you more thoughts on this company. They have a 3.2% dividend yield, a 40% payout ratio. So they sell drinks. So hopefully I won't get taken my stream down for this, but I didn't plan to be live much longer anyway. Okay, actually we can't. You know what? Refusal. Yes. All right. Okay, so this kind of stuff. They got some brands in the drink space, if you know what I'm talking about. I can't really talk about. But anyway, some drink company in Denmark. Interesting. Talent Energy. Let me get to Talent Energy. Lend Club. What's the ticker symbol for Lend Club, Maddie? We can check that one out. What up, Sked? So here's Talent Energy. This is one of the main PJM, basically electricity. If electricity prices are going up, these are like the most to benefit because they're right in the PJM auction area. So I think same with Constellation Energy. So, look, 93% of it is PJM. I didn't even know or remember that, but that's crazy. Okay, so yeah, the PJM auctions are basically this 12 states in the U.S. They determine all the electricity prices, and they're expecting a crazy amount of electricity price growth from AI data centers sucking up all the electricity. And that's the unregulated space. So anyway, they're an unregulated utility, so they really capture the demand faster than some of these other regulated names. But anyway, I don't think they own maybe a couple nuclear reactors, but I think they own maybe 2 nuclear reactors. They're one of the smallest nuclear plays, but let's see our company at a glance. Nuclear, natural gas, coal. I would love to see the exact number of percentage of nuclear revenue is. But anyway, tough buying it at this price. Actually, no. Look at this. They're saying the forward PE is a 22, even if you buy the stock right now at current prices. Again, because these electricity prices. Let's see the EPS growth. Yeah. So, okay. So the EPS is going to go from negative. So they had a one-time adjustment. It says negative 294. They're going to be making next quarter 280, 260. So their average on making. $3 to $4 a quarter, which could be, averaging out like 15 of EPS a year, which puts them at a 22 times forward earnings. That's kind of this. If you love nuclear, if you want a pure nuclear play, the purest nuclear stock of all time, check out CEG. There is no more pure play. They own over 30% of all the US's nuclear reactors. Um, Constellation Energy just acquired Calpine, and this acquisition is instantly accretive. $2 of yearly EPS. So if we go to this forward PE right here, a 30 forward PE. That's not nuts. I mean, well, considering how great the stock price has done, I mean, that's fair. There's a lot of future growth here. So this is the largest, purest nuclear play. I do own them, full disclosure. I own a lot of their stock, and I own them. I think that's because I've kind of had this thesis for years. I've made a bunch of YouTube videos about it, like a long time ago. This is going to be the growthiest utility I think out there. VST would be a second place. So this company owns like 34 reactors. VST it's not a close second, but they are second place. They own like 5 or 6 nuclear reactors. I'd stay away from the SMR space. The SMRs are like the small modular reactor companies, like Oklo. Definitely don't buy that one. Okay. See, what's your take on Powell? Do you consider it a hold? I do. So, should I do a deep dive on Powell in a minute? They hit a crazy all-time high today. We're up 418%, and I'm glad I have never trimmed or sold a single share of this company ever. We've just diamond handed it. So that's why some of my biggest regrets ever are trimming and selling out of stocks. But the valuation's always been cheap. The forward PE, even at all-time highs, is a 26.7. And their whole company's worth 4.9 billion. They have 480 million in cash, or net cash. So 10% of the market cap is their net cash, $1.5 billion backlog, specialty electrical project switchgear play, just margin expansion. I maybe remind me to get to them in a later here in a bit. Sea-Doo. Okay, I don't know if we'll cover this one. This stock looks like it's at, all-time lows. Looks like some penny stock. Yeah, so this whole entire company is only worth $200 million. I'd be very careful with SIDU just because the fact that it's a micro cap. I mean, the company is basically it's almost like a startup, because if you go to the revenue right here, yeah, that's bad. The revenue's down 30% year over year. They're doing $1 million of revenue a quarter, and they're losing net income. Here's a great small cap I really like. They're not super small, but this is InnoData. Oh, they're up 2% after hours. Yeah, they had a tough day. Let me actually check out the full hours here. Yeah, so they're up 2% after hours. So InnoData, this one is a software name that I love, but it's expensive. You can't really make this one as a meaningful size position, just because it's so small. But I do own this one on my Roth IRA as a small position, and I'm up a bunch on them still on my original cost basis. So that's why I'm not really allocating any new money to InnoData yet, because I'm still up, 76%, which is still a really small position. I only put $250 in this stock, and now it's worth 500. Or anyway, but in InnoData, everything here is super impressive, and they deserve this high multiple. So check out the revenue right here. The orange line is what the analysts expect every quarter they beat. Analysts expected 59, they did 63. So they beat on revenue. They beat on EPS massively every quarter. They beat 100%. They doubled the analyst expectations. They did 24 cents of EPS, and they beat on EBIT. Just basic, this wasn't some one-time adjustment, like really in just basic metric, earnings before interest and taxes. They beat by double. So, and they beat on revenue. And check out the future growth. Like, revenue was a record 62 million. It's never been higher than 62 million. It's supposed to say 69 million and 72 million. And the cool part is they're already net income positive. Again, this was a one-time adjustment. The net income didn't actually fall 50%. And the net income or EPS projections beat by double. So anyway, they're deleveraging your balance sheet. 1 year ago, the liabilities were 46% of the assets. Now it's only 36%. They're investing a bunch in the future. Their main customers are literally Google, Meta, and I think Microsoft. Those are their 3 biggest customers. I kid you not. 5 of them are Magnificent 7. So NVIDIA is a customer, and Meta it's everything X, Apple, and Amazon's the other one. Amazon's a customer too. So anyway, InnoData is a pretty cool, but they're expensive at a 52 forward PE. But I feel like this one might get acquired. Like, the market cap is 1.8 billion. Like, small company, even still, $1.8 billion just getting net income positive. Really, I'm so curious to see what happens with them. They're a data labeling company. Um, ZLDPF. Look. I can't find that one. You know what? I can probably type in the name and find it for you. Zealand, Pharma. If I can't find it, then oh well. Oh, is this ZLDPY? Maybe I typed it in wrong. So, this can't be it, or maybe it is. Because this is some ADR that's not really it. Are they a $5 billion company? Yeah, Danish company. They just IPO'd, and there's no revenue expectations. Or they did 1.4 bill of revenue last quarter, but did they like sell an asset? Or I don't. They have a great balance sheet. I wish I could give you more thoughts on this one. This might be some like it's a biotech company. They just got a bunch of, maybe that was their IPO revenue. Maybe that revenue they got was that IPO revenue. I don't know. Um, let's look at Course here. So they have 355 employees. Peptide-based medicines and products include Zigalog and Vigo. Danish company. Where does the revenue come from? Yeah, 99% of it comes from Denmark. So some Denmark medicine play. That probably wasn't too helpful there. I do apologize. CRSR. Let's check out this one real quickly. But yeah, with Tragons, yeah, Innodata did dump a lot of software names dumped today. Actually, real quickly, let me go to my all watch list here. All stocks. Let's just what moved the most. So Figure was up 16%, all-time high. Yeah, look at this. So Reddit was down 9.3, Innodata fell 8, Robinhood fell. Look at the aftermarket though. Robinhood's up. A lot of these are up after hours. Lucid's down. Sezzle, Coinbase. So a lot of the kind of AI names. Toast. Ooh, Grab. Grab might be on a pretty good risk to reward. I was just kind of deep diving on Grab. Actually, that's like an international Uber. I really like that one. I'm gonna see a lot of these names here. Gucci stock. Gucci fell by 4% today. Here's an international name if you want one, but kind of they own Balenciaga as well. Kind of these luxury stocks aren't doing too well. All right, let's see here. Yeah, dang, look at that. My Reddit fell 9% today. Is anything green? Yeah, we had AMD was green, Futu, Dave was up a bit. Colmaine was up 5. Wow, okay, they're having a bit of a recovery. Yo, CH Robert, I never gave a full little analysis when I bought this stock, but I bought the stock the day it hit an all-time high. Like at a crazy all-time high. After all this stock price appreciation, I'm like, I'm going to buy the stock because I still think it's going to give me 8 to 10% of my money back every year. And it's delivered well already. So that's a cool one. And I'm never afraid to buy stocks at all-time highs if I can kind of see the light at the end of the tunnel. The financials are there and the forecast. But anyway, I'm so behind here. My bad. Let's get to Corsair Gaming. I kind of went on a rant there. What's a single stock that's relatively cheap? If I keep everything except one, dude, I'd be so sad if I had to keep everything except one. I pick a super safe name like Google, a Mag 7 stock, Google or Microsoft. The Microsoft, if I had to buy, if I had any money left on hand, if I didn't just have to pay a bunch of tuition, if I had a bunch of cash on hand looking for a new freaking amazing stock, I'd buy Microsoft at a 27 PE right now. Microsoft's a steal. So here's Corsair Gaming. They kind of sell some commodities like keyboards, mouses, gaming components. So yeah, it's super cyclical. Let me look at this on an annual revenue. So yeah, look at this. The revenue's lower than it was in 2021. Let's see what their other half of their business is. Gamer and creative peripherals. It's actually lower also than it was in 2021. So, but it's had some. I guess they missed on revenue this quarter. Are the EPS positive? That's a question. So yeah, that net income is a little choppy. Like check out this net income. They're not making any net income yet. So that's not great. And they should have been profitable a long time ago. Let me actually see. Were they profitable in 2022? Yep. Right after COVID. They were starting to print net income, but anyway, don't love that one. Oh, hey, what up, Rand? Good to see you. Hope you're having a great night. I really appreciate those gifts there. Markets are up or down. Well, let's actually go check. Let's see real quick. Let me go to my watch list. Let's see. So yeah, went up on the day. The SPY is up 0.3, Nvidia is up 2.4. But look at all the other Mag 7 names. Like Nvidia is the reason that, oh my gosh, just look at Nvidia stock. It almost looks exactly like how the SPY and QQQ look. Almost identical, kind of like that wave. But all the other stocks are red. But my portfolio went crazy down here. I own all these names. Dave was up 4. I saw someone say Dave. That's a steal of a deal, like at a 17 PE. Powell's up 1, but Amphenol stock all time high today. I'm up they're up 115% the past year. We bought them exactly a year ago. We're up 150. Oh no, we're up 130% on them. That dang. Because when you're that's what I remember. Whenever you're up 100% on a stock, you ready? Whenever you're up 100% on a stock, if the company goes up 1%, you actually go up. Your total return is actually 102%, which is cool. And even more so, like Powell Industries, if this stock goes up 1%, uh, it'll go from 418 to like 425% gain just from a 1% move. Your returns really start to compound after the 100% gain. And that's where I try not to sell my stocks ever. I just diamond hand these. And Robinhood, I regret that's my biggest regret, like selling out of great companies like Robinhood. We're up 700% on them, but we sold, we only have 5 shares left, but we sold 50 of them at $36 a share, which was still a good, it made sense at the time. I was 200% gain when I sold all these, but I'm up 700% now. And it's been the wrong move in the long run. So don't trim, what's the saying? Don't trim your flowers and plant weeds or something. Don't take profits on your best winners and go buy some, stock that's not doing good when everything else is doing great and it's not doing good for a reason. But some of these stocks, Microsoft steal, Meta steal, Amazon even a pretty all right steal. I actually just bought a share of them yesterday. I didn't mind it. I rose my cost base. These should give great returns in 2026, I think, and just for the rest of the time. These quality, just shareholder-friendly, synergistic M&A, high moat, S&P 500 dividend-paying great stocks. Ooh, let's see here. What do you think of HOOW? Hood Weekly ETF. So this is a covered call ETF. Look at that. It actually just hit an all-time low today. Whoa, Robinhood CEO. Wait, I want to hear this. Robinhood CEO expresses frustration over legislative gridlock as crypto market structure bill gets delayed again. Oh, so crypto infrastructure getting delayed. Anyway, that might be why Robinhood fell 8% today. I don't know. Anyway, this just sells calls on Robinhood. So that's kind of actually been the move, I guess, for the past couple months here. But that's not. I wouldn't sell calls on Robinhood. That's how you get a high dividend yield, though. I recommend I just sell calls on Robinhood manually. But those ETFs are kind of a slow bleed. It's tough, on a total return basis. Hmm. I'm generally not a fan of any covered call stock unless you just want to maximize your income. And if you're young, like here's the covered call ETF on the Nasdaq 100. If I had to recommend any covered call ETF, it'd probably be this one. But even this one, like you just don't keep up with the Nasdaq in the actual market. Like there's a hidden opportunity cost of underperforming by a good chunk. Plus these high expense ratio fees, they're not dividends, they're distributions. So you pay short-term capital gains instead of long-term capital gains like normal taxes. Like for me, a tax bracket, a little life hack, if you make under 55K a year, which is me, if you own a company that pays a qualified dividend, so not a covered call ETF or not a REIT. So every company in here pays a qualified dividend. All S&P, or besides the REITs, like Google, McDonald's, every single name in here pays a qualified dividend. Whenever I receive a dividend, because I make under 55K a year, long-term capital gains tax is actually 0%. So whenever I receive a dividend from McDonald's, I kid you not, it just goes in my account, goes in my bank account, completely tax-free. No matter the state, no matter where you live, if you make under 55K, you don't pay any taxes on long-term capital gains. And that actually goes the same. That's why the taxable account, that's why I don't mind not fully maxing out my Roth IRA over here, because there's so many benefits to just a normal taxable account if you're low income. You also don't have to pay taxes on stock gains if you've held the stock for over 1 year. And that's me with Google. I'm not going to, but I've held Google for way over a year. I could sell this stock for 105% gain, $3,200 of profit, completely tax free because it's long term capital gains. So I'm making a 55K a year. I think you get the point there. But I really like to share that because I just thought it was so cool when I figured that out. Okay, CRMD. I'm definitely not a tax expert. That's for the U.S. Not financial advice here. So here, let's do Cormedics right here. This is a name that's been getting slapped, but my thesis didn't change on this one. I've actually bought a couple shares since the dip. I've bought like a couple shares, not much, but the EPS expectations are still great this next year. Like the EPS is going to go from 30 cents to 72. So they're going to double the net income. Like literally, they're going to be making 30 mil in net income a year. But if you're wondering, what's this catalyst? Why did the stock tank 30%? Basically, there was this government subsidy helping out their orders or like through like 2027, and it just got like canceled. So they lose their like government coverage on that. So they now have like bad guidance for 2026 and 2027. So they lowered their guidance. But this includes the lower guidance. And I mean, the EPS is still going to be great, but it's the year after where the EPS starts to look questionable. But I think the risk to reward is really good on Cormedics. And I can't stress enough how much you have to keep this as an insignificant size position because it's a micro cap. They're only worth $552 million. But here's the whole main point here. The whole company is worth $552 million. You're buying a company that's making 20 plus million in net income a quarter. This said it was like one-time adjustment. They actually made 50 million in net income, of real net income this quarter. That was all led by Def and Cath. This is 85% of the business. And this Def and Cath product right here, which is 85% of all the sales, is what I was talking about, that loses their coverage. Their other products are fine, but this is the thing that loses their products. Look at the growth. Literally, they had no sales a year ago. It was 800K, and it's 88 million in just a year. Like, I'm so impressed but as impressed as I am, and as much as I think this stock is a great position, you cannot make this as more than 1% of your portfolio, and it hasn't never been over 1% of mine. But yeah, I'm not too happy with this one. We're down 35%, but I have been buying a little bit of share. I mean, not much. Like at 712, and anyway. Yeah, you got a dollar cost average into these, and I'm glad I didn't make it as a meaningful size position because now on the dip I can actually buy more the next time I have some cash. Actually, going over Cormedics, I actually want to go buy another couple shares of them, but you got to keep that one. It's like you got to pretty much consider that stock like a lotto ticket or something because it's real risky. It's micro cap. But out of all the companies that are worth 500 million, I want the one that's making this sort of net income and the EPS, like the basically earnings. They're going to be the whole company's worth 500 million. They're going to retain like 200 million of after-tax net income, basically 1/3 of the market cap of cash. They could do buybacks with that. You know what? Hold on real quick. I'm gonna buy some shares of Cormedics right now. Oh, I wonder if it probably won't let me disconnect my phone real quick. I'm gonna deposit cash. This is so stupid. I'm about to end the stream anyway, but I guess I'm gonna buy a couple shares. Actually, I shouldn't even be. I'm actually not. I shouldn't because it's gonna promote like this stock right here. I really can't stress how like bad of a stock this is to keep as a big size position. You have to keep it as a super low, small size position. Did I even get enough for 2 shares? And it's the overnight market, so I don't even know if I'm going to be able to. Let's do it. Let's buy 2 shares real quickly. Then we'll end the stream here with a quick portfolio update. We'll buy it at 712. We'll buy it. Is there a overnight market? Ooh, it closes in 40 minutes. We'll send our order in. Hope that it got filled. It got filled at $7.10. We bought 2 more shares. Again, that's all I want to buy. I don't want to buy more than 2 shares because it's so risky. Okay. Lend, I saw someone saying Lend Club. I don't know what that is. Oh, we found it. Hey. I was asking for the ticker symbol, but we found it anyway. I got you. Ooh, we see some other ones. If you don't COHR, hey, Nate, my bad there. Let's do COHR2. We'll do that one before the stream, before I end it here. By the way, if you're enjoying, please drop a like on the stream. We stream every day. If you wanted to follow button, subscribe button, whatever. Please watch out for people impersonating me. I sell nothing. I have no course book, WhatsApp. I'll never follow you, DM you. We already kicked. There's three. We already banned three people that have the exact same username and profile pictures as me. So there really is a lot of people impersonating me. If you follow me, I appreciate that. But you might get followed by someone that's not me. So anyway, Lending Club Bank. So they must have a banking charter. So Lending Club Bank. Let's see. A lot of the banks are doing great. So the revenue beat on earnings for the past 3 quarters in a row. That's great. Specifically, last quarter was a massive beat. Their EPS positive. The EPS projections are good. Let's go down here. So yeah, they're making 44. It was really bad a year ago, but now for the past 2 quarters, it's been 40 mil in net income a quarter. I wonder what caused that. So Lending Club Bank, yeah, checked out that steady growth. It's at a new record this quarter, 261 million. Oh, but that is lower than it was in 2022. So look at that. It's kind of recovering. If you look at this on an annual basis, recovering from its 2022 level. So that starts to make more context on why, if we zoom out, this stock is way lower than, this stock is lower than it was in 2017. But what's the forward PE? So they're cheap now, a 13 forward PE. Actually, this chart for the past couple months here, it looks exactly like JP Morgan. When you zoom out, it doesn't, but this right here looks just like JP Morgan. So they've gotten their stuff together. Actually, I like their financials now, as long as they keep that up. Let's actually pull up JP Morgan stock next to them. Well, actually, they've done a lot better. But yeah, in the long run, JP Morgan is kind of, anyway, let's see here. COHR, what is this one right here? Coherent. They're at an all-time high right now. Let's see if there's any news down here. Coherent introduces Sapphire XT laser platform for life sciences and semiconductor application. Coherent launches FieldMax Touch laser power meters for precision diagnostics. So some sort of like laser company. I don't even know. Let's go check out their revenue right here. That's impressive. So 69% of the revenue comes from data centers and communications industry. And then 32% of the revenue is the industrial market. North America, 61% of the revenue. And you do get some international exposure here. 12% Europe, 12% China. That makes sense. So if we look at their profits, they're at a record profit. So look, if we look at the revenue, this is exactly why the stock has done so good. The financials explain it. This stock is at an all-time high right now because of this. The revenue's up by 17%, after grew 28. So the revenue's up 17, but the profits are up by 73. So that means margin expansion. Gross margins are up 7% after it grew 17. So just continuing that streak. But yeah, it's super deleveraged to the balance sheet. The liabilities were 60% of the assets. Now it's only 40%. All right. You should buy some shares going to the moon. It probably is a tough risk to reward at this price because, yeah, look at that. The forward PE is a 52, but this is a growthy name. They deserve a high multiple. Probably a tough one to allocate a lot of new money into. Can you check out Path? Ooh, Casey, we got to do Pepsi too. Good to see you, Casey. UiPath, this is a software name, kind of losing to Palantir and Snowflake. They do the exact same thing. Palantir and Snowflake really are catering to like the super rich enterprise companies and the government, when UiPath is really working with like small businesses, medium-sized businesses. Let's actually, they were originally seen as like the original robotics AI play. I'm down bad on them. We're down 30% on UiPath. And I kid you not, I've been a shareholder. Look at the very bottom right, or on the right, very right side. These are all my orders. These are in 2021. I was buying this stock at 57 a share, 52, 40, and we slowly lowered our cost basis. But yeah, we've just, I don't have a good history with UiPath. You're wondering what happened back here. The CEO quit unexpectedly out of nowhere, left the management team for dead. They lowered guidance. I mean, it's been a ride. So, and they're not cheap. Well, or not on a forward PE, because if we look at the PE right now, it says they're a 35, but they had a one-time adjustment because the forward PE is an 83. But they do have some recent partnerships. Like I believe they partnered with like OpenAI and Google Gemini for some sort of AI integration here. So, and actually another thing I really like about UiPath is their net cash position. They do have a lot of net cash. Looks like their cash pile is down a bit, but I wonder if that's from buybacks. Anyway, they have 700 million of net cash, and it makes some interest every quarter of, well, pretty good, 12 million of positive interest. You know, if a company had debt and paid negative uh, interest on it, this would be negative, but they're making positive 12 million of interest a quarter that helps out their bottom line. But yeah, here's the operating profit. They're still not net income positive consistently, but look at these year-over-year comps. It's really this is great. The narrowance of their losses, where probably the same time next year, they're actually going to be making net income every single quarter because right now it's only 2 quarters a year, but the year-over-year comps are great. We want to see that trend continue. And here's the thing. I'm really bearish on UiPath, but I still will like them, so I'm not gonna fully sell out of them. I'm not gonna take the loss on UiPath. I still see some light at the end of the tunnel here, but it's not a stock I would recommend having as a meaningful size position. Even on this little dip here, I do think there's a lot of risk there, sadly. Let's do Pepsi real quickly. PEP. You know, Pepsi, this is one of the food names that have been getting hurt by the whole, I guess, GLP thesis and just overall, a lot of food stocks have been struggling. I want to see if there's any weekly news on Pepsi. PepsiCo's partners with Simmons and NVIDIA. That's crazy, to modernize operations with AI and digital twin technology. So Simmons is that electrical infrastructure company in NVIDIA. So modernize operations. Anyway, I don't know how, you know, Frito-Lay, Flamin' Hot Cheetos, maybe they could get some robots in their bottling factories and not have to pay a human. I don't know. But anyway, let's look at Pepsi real quickly. They're a big dividend play. If we look at the dividend yield, you get a 3.8% dividend. Now, the payout ratio is a little high, an 80% payout ratio. But look at this forward PE. That's a cheap valuation. It's kind of right in line. Actually, I, there's a lot of names are really cheap. Like General Mills is at an 11 forward PE. Kellogg's is really cheap. I forget their forward PE though. Mondelez, which is Oreo, Chips Ahoy, Toblerone, a million other great brands, is at like a 14 forward PE. So yeah, Pepsi's at a 17. They deserve this kind of high premium though because they have the best brands. You know, I could go on for a million years about their family of brands. Obviously, Pepsi, you know, Gatorade, all the Frito-Lay brands like Flamin' Hot Cheetos and Funyuns. But anyway, let's go check out their bottom line right here. So here's probably why the stock's struggling. If we go to the revenue is single-digit growth, and sometimes it's been negative growth. But, you know, revenue's up 2.6, last quarter is up 1, -1, -0.24. So kind of revenue that doesn't beat inflation. And so the revenue was up 2.6. But the net income, the profits were down by 5. But it's still no big deal. The margin going down. Like the forward P is so good. So they're making actually, yeah, here's the one-time adjustment. It says last quarter they made 1.28 billion. They actually made like 2.4 billion. But anyway, if we average it out, assuming this was 2.4 billion, they're making on average, or maybe we can look at the last year to kind of get the better picture here, like 2.8 billion a quarter. Let's just say that 2.8 billion of net income a quarter. They pay a 4% dividend. That dividend costs, so they can afford it, a 1.95, or it cost 1.95 billion of their net income every quarter goes straight to dividends. And since they have a little bit amount of money left, check that out. At the top, they're doing a couple hundred million of buybacks a quarter. Very shareholder friendly. If there's a company that's going to be safe, I think it's going to be Pepsi. They're not going to have to cut their dividend. You just get even if the stock stays flat for another while, you know, you get 4% in qualified tax-free dividends every year. So, or depending on your income, it could be tax-free. Okay, hey, what up? Hirsch Lemez? I'm so behind on the chat. I forgot to look at the YouTube stream here. Thoughts on you? Oh, Unity. You didn't diss tank today. Liquida, please. What is Liquida stock? Hey, what up? Here's Johnny. Oh, and PGY. You know what? That'll probably be the last one. So yeah, Unity. Oh, what? Unity's green on the day. Then I'm just slow. Must have been another day. So no news around for Unity. They make my favorite game ever called Rust. If anyone's heard of Rust before, but used to be a Rust YouTuber. But anyway, I would love to own this stock, and because it fascinates me, I've used their software. But they lose a too much unsustainable amount of money. They're losing over 100 million of after-tax net income a quarter. They're not anywhere near close to profitability. So they're losing 100 mil a quarter, and the revenue growth is kind of not so great. It's up 5% year over year, but that's after it fell 18. Like, look at these year over year declines right here. Like, the CEO quit, they changed their pricing model, all their customers boycotted, then they changed it back. It was a mega story. I remember a couple years ago. But yeah, it was kind of originally like a big metaverse play. It spiked up with the metaverse. But yeah, I wouldn't trust too much with Unity because there is no forward PE because they're not expected to make net income anytime soon, unfortunately. Bought some Dave under 200. Hey, nice. Let's check out this one really quickly. Pagaya Technologies. I was watching those old Nathan videos. Oh, they're not good. Snag some Dave too. Yo, Dave is a good one. I think they were green on the day. I think Cecil was down, but Dave was green. Yeah, I am a shareholder of Dave. We're up great on them. Yeah. Oh, it was the previous day. So when they announced the 10% credit card cap limit or whatever, it just sent Dave down, even though they're like, I don't even think affected by that. But Dave, if you look at the kind of very left there in the left middle, the forward PE is a 6. Like, already the current PE is a 19, but the forward PE is a 16. Here's the unbelievable growth part about Dave. Obviously, well, actually, they had a one-time adjustment. Look at the free cash flow per share. It's $6. That's well over like $22 a year if you annualize that. So they're like 10 times free cash flow. But the best part is, first off, this revenue growth is unbelievable, up 63%. But look at the net income, record net income, like real money, 45 mil, record quarter. They have insane net margins too. Everything here's out in the right direction. I just really like Dave. Fortress balance sheet too. Look at that deleverage. Liabilities were 42%. Now it's only 32. And that's why I wouldn't sell Dave. Actually, I did sell Dave, but I'm going to buy back in. Well, I trimmed Dave, I should say. Actually, this was on accident too. I put in one order to sell at 272.29, and it did two orders. Look at the time difference. It was a 5-second time difference. I did not mean to sell two. But anyway, I sold 2 shares at 272. And it's 192 today. But yeah, here's where we bought the April dip. Actually, we bought the stock at $78, and people called me crazy at the time because I had this was the chart when I bought the stock. This was the chart people were looking at, because this was a $0 stock, $5 stock. Then it rocketed up, and I bought it after it had already rocketed up at this price. I'm like, the risk reward is fair. The forward PE is cheap. And this is the kind of stock that continues to go higher. And I think it's coiling up. It's rubber banding for its next move up. I actually really like this chart. I don't think it's going under 186. Like, again, I mean, there's a clear floor here that it doesn't want to go under. And the value and the fundamentals are there. That's the thing that will really move the stock in the long run. I'm actually even looking at buying another more Dave. They're just so good. Can you check T Stamp? Hey, what's the ticker symbol for T Stamp? If you could be really quick here. What do you think of Rivian? I sadly, Ethan, do not like Rivian. I'd rather buy Amazon because, well, Amazon is the largest shareholder of this company. If we go to the shareholders here, Amazon owns 13% of all the shares, and then Porsche owns 12% of all the shares. But and I love the fact that Amazon, all those, has anyone seen those new electric Amazon vehicle delivery vans? They're all made by Rivian, and Rivian also makes trucks, but their deliveries year over year have actually, I think they were negative. I hope not. Or, oh no, that was, wait. Vehicle deliveries, 9.75K versus 14K. Well, let me see if there's any weekly news. Rivian recalls 19,000 R1 vehicles over rear suspension safety issues. Okay, well, that doesn't matter. But yeah, this is the sad news about Rivian. Just that it's a pure net income. And I don't love this industry. Like, the end game would be to sell an electric vehicle at a super low net margin. It's so commoditized. I mean, with Tesla, Lucid, they're all having to cut prices, and it's just like, they're going to, at the end of the day, sell a low margin commodity. I like the Amazon order, and they just are nowhere near profitability. It's a sad thing because they're losing like a billion a quarter, a billion, 1.7, a billion, 500 mil, 700 mil, a billion, like all for eternity. This company just burns 1 to 2 billion of net income a quarter. And it's just so unsustainable. So they burn 4 billion a year. That's well over 10% of the market cap they lose every year. And that's why the sad part is they're also diluting you while the stock's at all-time lows. It's the same thing that's happening with like Archer Aviation and Lucid. They just lose so much money, and the stock, I can't recommend the dip, sadly, on Rivian. It's just not one that interests me too much. Oh, did I forget to get to PGY? Let me get to PGY. I am stupid. So here's PGY right here. There's comments. Price target $40, and then intelligent Moomoo comments here. Stupid seeking alpha analysts give strong buy. Well, hey, let's see right here. What is this news right here? I don't even know. Funded repurchase using stock, or I don't know. This is a software name and they're cheap. I think, what's the forward PE here? Yeah, look at that on the left versus right. They're at a 13 forward PE. So that's a very fair forward PE of 13. And yeah, look at the revenue. It's going to go from 289 to 244. So that's a great year-over-year growth. Yeah, the EPS is going to go from 10 cents to 28. The EBIT too, so just basic earnings here. And they've been beating on expectations. Like this quarter, they expected 340, they did 350. They beat on EPS, expected 16, they did 23. So it's a profitable company. Yeah, whoa. Look at the growth here. So the revenue's up 36 and the profits, the net income is up 382 to 69 million. Record profitability this quarter. That's phenomenal. I can see, oh my goodness, you know what? This might be my next buy as a swing trade. I don't know. I'm $1.8 billion company. Where are they headquartered? That's a question I have. In New York. I'm really liking what I see here. I might make this as like a really small position right here. Let me pull up their website. Let's see what their website is. Hey, thanks, Lamar. I appreciate that. He says, I like the analysis. Oh yeah, there's some like software company that works with, fintech companies, credit card companies, I guess like Visa, SoFi was on there. How this works is a network of 31 lending partners and 150 investors. You integrate your origination system with our network through our API. You approve more customers in your brand. So something like that. I wonder if they have any. So you keep more borrowers, grow without risk, deepen customer relationships. So anyway, some sort of fintech company. I like the numbers there. Cheap valuation. A lot of these fintech names are cheap right now. I wouldn't buy PayPal, sadly. I don't know. PayPal's like cheap PE. A lot of cheap PEs out there. Oh, IDAI. What was this one? T-Stamp. I've not heard of this one. So I don't really go over these. I don't really buy this one. If you look in the top right, the market cap, they're only worth 21 million. That's a small market cap where you just can't trust. It's like a complete red or black scenario. You can't you can't really trust anything meaningful in stocks as those. So they don't really have much revenue. They do 500 to 800,000 revenue a quarter. I'd be careful with this name. Yeah, they're not net income positive. I want to pull that up actually. Doesn't want to load the net income. Okay, so they're losing a couple million net income. The EPS, they're supposed to stay net income negative. They're losing more money than expected. I guess the revenue is supposed to be $1 million. Yeah, I don't have anything good to say. Chris says RPRX, and then I gotta go, sadly. We've been live for an hour and 50 minutes. By the way, if you want to hit the follow button, we stream every day, sometimes twice a day. We just look at stocks. I sell nothing. And Royalty Pharma, $23 billion company. Let's go look at their net margin if they're a royalty company. Look at the forward PE. It's an 11. That's insane. So the current PE is a 22, but so the net income is supposed to double in a year. So they have a franchise business where they collect like franchise royalties, other products revenue. That's up 9% year over year. Irvidisi, whatever that is, that's down 3%. That one's up 150. Let's just blend all this together. When we blend all this together, they beat on expectations this quarter and the past 3 quarters by a crazy amount in a row. They expected 763. They did 814. But let's go see what their net income is, or net margin. Yeah, 40 to 55% net margins. Yeah, they're easily making a couple hundred million in net income every single quarter. Good balance sheet. So interesting name there. What's the gross margins? Or maybe we don't get that. Oh well. Yeah, good free cash flow. Yeah, I can't complain at a 11 forward PE. I mean, those are great growth expectations. So anyway, I sadly gotta go. I wish I could stay on longer, but I hope you guys have a great rest of your day. I'm gonna be streaming tomorrow for sure. I'm gonna do it like 2.5 to 3 hour stream tomorrow for sure. I might do two. So yeah, if you want to follow button, I appreciate that. If you want to support me, there's only one way to support me. Subscribe to my YouTube channel. It's called Nathan Roberts, and the link to my bio. I think you'd really like to watch this stream specifically on the replay. The very first, I'm actually almost gonna like re-upload it as a video because I think it's so good. The very first 4 stocks we go over on the stream, I bought 3 of them in one yesterday. I bought three stocks I bought yesterday. I show you, and one stock that I don't own, but I'm literally about to. The very first stock. It's super interesting. So yeah, YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type in YouTube Nathan Robert. The stream stays up there. But yeah, thank you to everyone on the YouTube and TikTok stream. I'll see y'all very soon. I sell nothing. Watch out for people impersonating me. Hey, thanks for everyone on the YouTube stream. The most 6-star. Here's Johnny. I'm so sorry. I wish I could. Oh, JVM said Hood. I wish I could get to a lot of these. They work with SoFi approved third-party loans, and not from consumer. Their loans are not backed by third-party investors. Oh, hey, thanks for that. My music and see you. Oh, beat this. I wish I could get to that one. We'll get on that one tomorrow. So see you all very soon. Have a great rest of your day. I know the market